The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, so we wrapped up the trading day on Tuesday. Chicago and KC wheat found a little bit of strength on some of the overseas weather concerns. Largely, though, these markets had a better than expected crop progress report Monday afternoon and just felt like they kind of pushed lower on that news. Not a lot of fresh news to talk about in the grains. Cattle had a good day, though. I know we'll talk about that and much more. Joining us for market analysis today, Jacob Burks with agmarket.net. Jacob, it's good to talk with you again, buddy. And I know your neck of the woods there in Wisconsin, parts of Iowa, others, been getting a decent shot of rain here to start the week. Severe weather potential out there Tuesday as well. How are things in your neck of the woods?
Yeah, 1.7 so far today, inches of rain, and it continues to come down. Sounds like our neighbors to the west there are going to push some tornadic activity over our way. So there's kind of keep an eye on the radar here as we go throughout Tuesday, and just kind of keep your head on a swivel. I mean, it's something that we've seen some pretty major storms come across already and dump a whole lot of water in some areas that you got to be careful what kind of rain dance you do out there, because it might all come in one year. And it seems like the western part of Iowa has done that, and they're really getting it. With I think some of the people that I've seen put out there 5 to 7 inches across some of those areas. So the red dots on the screen are dumping quite a bit of rain out there, it seems like.
Yeah, definitely got to be weather aware with this type of severe weather we're getting this spring. And Jacob, it's hard for me to imagine and how much planting progress got done last week, considering all this active weather we continue to have and all this rain. I mean, man, oh man, I did not expect corn to be 70% planted nationwide, or soybeans over the halfway mark for that matter, as of Sunday. But that's the number USDA gave us, and that seemed to be the biggest driver in the grain trade on Tuesday.
It's really hard to get caught off guard sometimes with the amount of technology, and the year after year, you just seem to find a way to get surprised. And I think, count technology, count little breaks in the weather, tiling, the tiling that's been able to be done, and all of a sudden, when you get that little bit of a gap, it seems like we can really throw some numbers out there. I also don't know that, this is a very subjective number that you're looking at. People drive around, they think, okay, this is what we're percentage wise we feel like we're in, talking to co-ops, talking to other seed dealers, talking to whoever they can. But it's something that, we probably were a little bit further ahead as we got into last week. If they would have came out and told me that it was 75%, I probably wouldn't have, just from the people that we've talked to. Now you're starting to see the eastern side of the Corn Belt maybe get some done this week. I was wondering, I said, what's going to weigh out the eastern side of the Corn Belt going forward, increasing the planting progress, or seeing some of these fields over here in Iowa and Nebraska maybe going backwards right now, that have been unplanted, if you will. So.
Yeah, well, and hopefully for folks who are done, all this heavy rain coming through, hopefully we're not talking about planting again, with any replant situation. I don't want to really throw that into the universe, but I know I'm hearing some chatter about that too, with just some of that heavy rain. So I guess that boils us down to, we're largely in the weather market here as we move forward. I want to focus on soybeans with you.
Sure.
First, the biggest losses there on Tuesday, and I know especially front month July beans challenging 1250 and didn't really have the fundamental support to bust through that mark. And I'd say soybeans were the biggest loser on Tuesday. What are you seeing on a chart right now? I mean, what's your feeling in this soy complex, Jacob?
I think the first thing that sticks out to you right now is some of the highs that we put in there in the the July contract. May highs to yesterday's highs. You have just some overhead resistance. Today, you could consider that a little bit of a downward or a double top. So that's the first things that jump out to you. I think when you lay all that on top of the fact of just simply looking at the global balance sheet and seeing such a high stocks to use number, that it's really hard to get overly excited right now on some potential planting delays, potential problems with forecasts in the future. I think that not seeing any type of export demand, the fear of the renewable diesel demand not being able to carry us through this burdensome supply. I think that's what's looking out here is it's really hard. When you see moisture coming into the ground, removing so much of the drought across United States. It's just really hard to get overly excited that, hey, we're going to keep pushing this thing higher and higher and higher right now.
Well, and I wonder too, with soybeans, obviously, getting back to average pace in the U.S. We have the flooding concerns in southern Brazil, but that doesn't seem to be a big factor here, because I think at the end of the day, we just look at the soybean balance sheet, the lack of export demand, things like that, and I think the market seems pretty comfortable thinking that we've got enough soybeans on hand right now.
Well, I think you guys do such a good job of getting the information out there that's probably already into the market. I mean, you look at the fear of South American production losses. There's a lot of subjectivity to those numbers too. You have different private analysts. You got different government entities down there putting numbers out that are really, really far apart, and then all of a sudden you start seeing those come back together. You look at last year, and some of those CONAB numbers and USDA numbers stayed wide. So the idea of what's actually there, what's available for the market to be to be exported, that's still up for question, and that's a year in advance. Right now, you look at, hey, are we competitive? And we're just not competitive in the global market right now. So the fear of the future, we could see some type of problems in the export world. Maybe we get to partake in some of that down the line. But right now, it's what's on the balance sheet, what's ahead of us, and there's just not enough right now to push us through some of these some of these resistance levels that producers, remember, they're still out there making sales. We're still out there looking at what kind of opportunities that we can for next year's crop. That 24 crop being around from $12 to $12.20. That's gotten a lot of attention. When it gets back up there to $12.20, you see some producers selling there.
Yeah, I was going to say, it feels to me like with Novi beans, Jan beans, whatever, over that $12 mark, it seems like it's a good spot to hedge a little bit and get some floors locked in here in this soybean market. I think maybe the same in corn. I know corn had a really nice rally going, then we backed it off. D's corn at one point had gotten close to 5, didn't quite make it. 482, we'll call it, on the close for Tuesday for D's corn. I mean, your thoughts of this corn market? I mean, do we feel like we can get back to close to 5 again here on some of these new crop contracts, or should I be thinking about, if it pencils out, getting some floors locked in corn as well?
It's really hard to be overly aggressive making sales whenever, like I said, there hasn't been enough to push the beans, higher. Hasn't been enough to push the corn higher yet. I mean, you start getting beyond the Memorial Day weekend, and now you're extended forecast, and then you can start getting into those levels. So I think that this is the time of year. I mean, you go back, look, seasonality of it. Anywhere from that May 1st to that third week of June, you got a lot of opportunities to see some sporadic trade. And so when you say, do you have an opportunity? Absolutely, you have an opportunity. We're not done planting. We're at 70%. How much prevent plant? You can start talking about all those different things. If you go back out there and you go look at just take the individual analysts, not individual farmers, production or marketing plan, but just go look at the analysts that are out there, and you're going to see a lot of different numbers out there. The 503 gap that we want to see, $5 is a psychological level. You're probably going to have a lot of orders to sell anywhere between $4.95 and $4.98. You have a lot of on-farm storage in the old crop too that's still out there yet to sell. So when you get above that 60 level, around that 460 level in the July corn, you're seeing a lot of farmers selling. So we just talked about 2 months ago about how the commercial position was extra long, and now you're starting to see them stack on some sales. That's producer selling. That's the opportunity that these farmers are looking at to say, hey, I've got to get paid. So whenever you ask the question, should you be looking at laying some floors in there? I think 100% absolutely. I think that however you want to do it with options, if you want to go put some HTAs on or do some min-max products or whatever you want to do, getting out there and looking at your profitability and making sure that you have that opportunity to have something done if the market goes against you right here is very important.
Wheat trade real quick. It seems like the weather concerns in Russia, Ukraine, the Black Sea region continues to be the biggest driver here. U.S. winter wheat crop looks okay for the most part. We got that confirmed with the Kansas wheat tour last week. Spring wheat planting well ahead of the average pace. So it feels to me that this wheat story is largely tied to weather overseas, Jacob.
Absolutely. You can, if we put a blinder on you and just said, don't look at the world's wheat situation and just go look at the U.S., you'd sell. I mean, when you finally see the rain in the western Kansas come in, that was a huge improvement to what their conditions are out there. You saw I think the Kansas wheat tour was 4 bushels better than last year. So a lot of optimism as far as production here in the United States, and we're getting a rally. I would not be wanting to look the gift horse in the mouth now and saying, hey, I didn't do anything with this. Been active sellers. I do understand, like you look at the chart on the July Chicago wheat today. Hey, we broke out through the top. We had a strong close at 697. Looks very good for some continued upside potential. But I don't want to be the guy turning around looking here and saying, oh, guess what? Russia got some rain, and all of a sudden we don't have that fear on the world market, and we see a start of a downward trend in the wheat. So I would say, yeah, you'd want to be taking advantage of that, but with obviously leaving the top side open in some way.
We're talking with Jacob Burks from agmarket.net here today on Market Talk. Let's go to livestock and let's talk cattle. A good day Tuesday, some good strength in feeders, especially. I think with the corn market a little bit lower, that helped. Box beef, though, last week, such big gains, was really the big driver. It felt like in cattle. Box beef on the middays on Tuesday was back higher after kind of mixed on Monday. Your thoughts in this cattle trade? I have to think box beef has got to continue to be the leader here right now, Jacob.
Yeah, absolutely. I mean, when you start seeing the packers cut kill back and decreasing inventory, decreasing product, decreasing supply, the fear is when that happens, as it was happening there for a little bit, box beef stayed pretty stagnant, stayed down around the 290 level, and just didn't make a move higher. But that's kind of worked in our favor now. Got into the grilling season. The demand's strong there. They haven't overkilled, and then all of a sudden you're seeing continued pressure. So that's worked in their favor, but it's also worked in the producer's favor too. The cattlemen now that the Packers able to come out here and pay those high cash prices. I think we're seeing 190. I think it's the bid today. I think that you could possibly see the 192s, 193s that we saw back not too long ago in the cash market. So I think you could pushing the opportunity to make some new highs. I think the cattle market, we've talked a lot about the lack of cattle that are out there. And I think Friday we'll start to look at another report here that it's going to be hard to find these placements. It's going to be hard to see that big move. I think they're expecting like 5.5% lower than last year placement number on Friday. And I think that could be something that we could even be surprised on even bigger.
Well, and I'm glad you brought up that cattle on feed report, because we're going to have that report heading into a long holiday weekend. So an extra day to digest that report. If I'm a cattle producer and I'm looking at some hedging strategies and more here, am I thinking about getting something on the books to protect any risk here, especially ahead of a long holiday weekend with a cattle on feed report?
I mean, I would be not doing my job if I didn't say, I don't manage risk. But I do feel like if a person has optimism, it's what we're seeing now. And on Friday we'll see that report. And there's a lot of different ways to do that. Whether you're looking at futures and options, whether you're looking at forward contracts, whether you're looking at LRP products. I think that those are very, very, very valuable, especially when you have the opportunity with this type of profit. But if we're looking at what this market can and can't do. I think the three things that are out there that still weigh over us, and that's simple: the inflationary situation that's helped us in some of these commodities, but it also going to take away some of that income to buy the higher cuts of beef. You also saw today the dairy market fall off 75 cents the first 2 months. You saw limit down in those 2 months. That's one thing that's been helping us is not having that extra cow kill. Not having that extra lean beef in the market, that's helped raising the tide as well. So if that changes and you start to see continued depressed, we've been on a big run in the market. But if that starts to turn around and you do see some type of flush of cattle into the coal, a higher coal race or something like that, that could weigh on it. The other thing too is you got to start thinking that anytime we could see some type of bird flu rumor or anything like that pick back up. So all those things are there to where, yes, when you have profitability like this and you're looking at it to take advantage of it. But man, with the cattle numbers that we're seeing and strong demand right now, we could see some. This could be the move that we've been talking about in the spring, that you start seeing some really, really good opportunities to see some record prices.
Speaking of depressed, hogs are kind of depressed right now, Jacob. That market, that's been kind of scary here the last couple of weeks, hasn't it?
I'm an Arkansas Razorback fan, so being a depressed hog is not a big deal. I think we're kind of getting used to it. But yeah, you saw that the cutout was really strong. We made those moves up in the middle of April, and then it's just slowly, steadily come down. We have, even with the box beef, being as strong as it has, I just really expected to see this complementary product be able to take off again. And we just, realistically, the numbers are there. Our demand's been pretty good from an export standpoint, but it just hasn't been enough to chew through some of this inventory. I do think that you look at it, we've seen a 62% retracement number. We're almost there in that July contract. It's hanging out at 98s where the retracement is. You got a 200-day moving average is here. So, anybody that's made some strong sales and stuff, I think now would be a good opportunity to come in and put some call strategies, some re-ownership strategies for, a potential move, especially if beef stays strong demand. I think you'll start to see the cutout pick up.
Well, let's wrap this up today, Jacob. As we look at these markets, if there was one or two things you could tell folks or reiterate to them across this market trade here as we're heading towards the holiday weekend, what would you say to them, Jacob?
I talk a lot about downward risk management, but I always want to make sure that we leave your top side open to when you get in these type of weather markets. You don't know how big these spikes can be. I was very adamant if we got to certain levels in the wheat market, boy, we'd really want to be, and especially with the news domestically that you're seeing. But if you get too pointed one direction and too much risk management on, you hurt yourself and leaving out opportunities out there. So, we like to buy the puts and we like to sell the calls, but we like that for a reason. We like to leave that top side open to a certain level where we would want to sell. So just get with the broker, get with somebody that has a lot of knowledge in how these options and what kind of different strategies can give you that flexibility. That's the using options is the term, is what when we use the term flexibility. That's what we're talking about. Put yourself in min-max opportunities and be able to take advantage of these moves without limiting yourself too much.
Well, I know if folks want to reach out to you and the rest of the team there at agmarket.net, you guys have a ton of great resources to help folks with their marketing plans, don't you, Jacob?
Hey, yeah, we even have smart people that work with us too. So check us out, agmarket.net, and just check out our intel. We'd love to give you a 30-day free trial of that.
Well, Jacob Burks is one of those smart people, too, that works for agmarket.net. Don't sell yourself short there, my friend. Appreciate the time. Thanks for joining us again on the show. Have a great week and a great Memorial Day weekend. We'll talk to you again soon.
Thanks, Jesse. Thanks for having me.
Jacob Burks there with the agmarket.net joining us here today on Market Talk. That's going to do it for the program. Thank you for joining us. I'm Jesse Allen. Have a great rest of your day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.